It certainly has. No sooner than we've started to relax about the trade war, which of course escalated over the last couple of years to that phase one deal, which looks like it's going to be signed in the next week or so. But we've been replaced by this escalation, which obviously adds to the risks again. Obviously, it's got investors feeling nervous again, feeling uncertain about the outlook. A lot depends, though, on how far this escalation goes. If it's contained and focused more on proxies rather than direct attacks on each other, or particularly on Iranian soil, then maybe it'll settle down and won't be a big issue. But obviously, that's unknown at this point, and so you can understand why markets reacted today like they did. That said, I am conscious that there's been numerous events come out of the Middle East over many, many years, threatening to derail the global economy, send oil prices spiralling, and a lot of them don't. So it's a difficult situation for investors at the moment to try and work out which way it will go. Obviously, the next few days will shed some light on that front, but it is a time, I guess, to be somewhat cautious.
Just want to bring some comments that we're getting out of Iran's government spokesperson saying that Tehran does not seek a war but will give a crushing response to any aggression. This coming through in a tweet out of Iran just in the last few moments. Of course, we're watching, Shane, what the reaction has been in oil prices. How high does the oil price have to go in order for it to be an impediment to the global economy? Right now, just sitting between that $60 to $70 a barrel mark if you look at the NYMEX and Brent contracts. But if we see a significant oil spike, what level do we have to get to before it crimps consumers around the world and starts creating not only inflationary headaches, but also headaches when it comes to a slowdown in global growth as a result of firmer prices?
That's a good question. At present levels, it's not a major threat. It's not that far away from the range it's been in for the last year or so, so I wouldn't be overly concerned about it. Historically, we've had to see the oil price double over 12 months to get a major negative impact on global growth. That's what preceded the severe recession at the time of the GFC, and also recessions in the early 90s and 1970s. So you basically need more than a doubling in the oil price to have an impact. Now, you could argue that these days the oil intensity of global GDP is less than it used to be, so oil prices may have to go up even more than that to have a big impact. But my rough guide would be if oil prices doubled over a relatively short period, then I would get worried. So far, we're a long way from that, and therefore there's potential for more upside on this front. I mean, and that's potentially an issue here. President Trump might think, well, the US these days produces a lot of its own oil, in fact, the bulk of its own oil, so it's less dependent on global oil supplies, so therefore he may be prepared to take more risks. Likewise, the Iranians might think, well, you know, what have we got to lose? He's not going to invade Iran. Maybe we can withstand some attacks on our own soil. So that's the risk, that this could escalate because either side can miscalculate. I think the problem for President Trump, though, is that if he lets the oil price go up too far, then that will start to have a negative impact on his base, because as oil prices go up, the US market is still part of a global market, so West Texas will go up along with Brent, as it has already. Then Americans will pay more at the bowser, at the pump, for their gasoline to fill up their pickups, and that, of course, will cause a backlash against President Trump. So right now, he can benefit from sounding tough, but I don't think he's in a position to withstand an oil price crisis, which weakens the US economy and sends US gasoline prices skyrocketing. So at the end of the day, I think he will prefer to play this approach on a limited basis rather than look for an all-out war with Iran.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.